Hi everyone, I'm Jeremy Reynolds, Alpha Money Coach, and here with Jason Jones, accountant. Say hello, Jason.
Hello guys, how are you? And welcome.
Now here I've managed to get Jason, and he's very knowledgeable on really advanced accounting needs and issues and taxation needs as well. But I'm going to pose some really basic questions to Jason, which could be very helpful for you. So I'll paint a little picture for you. First of all, the great Australian dream is to own your own home. Now, one of the things that banks look at is income. They look at income and they want to know, what do you do, how long have you been there, and what evidence have you got of your earnings. And that's quite simple when people are employees or PAYG, because you have pay slips, you have notices of assessment, and you can look at things in a real simple sense. However, it can be a little bit more complicated when we have a self-employed client. So we have we've got Mr. Client, and he's a Sparky, so he's an electrician, Jason, and I've had a talk with him, and I say to Mr. Client, well, the first thing we need is 2 years full financials. So my first question is, before we go into whether they've got it or whether they don't, what does it actually mean for a client? What are financials? What are full financials? What are they in their entirety, Jason?
Well, you're developing a scenario that I'd like to ask a question in relation to what type or structure that they're operating under.
Yep.
That'd be my first question.
And what are some of those? Like, what are the different structures?
You've got a sole trader, you've got partnerships, you've got trusts, you've got companies. With that, you've got different designed documentations that are required by law and to present to the ATO on an annual basis for them to be in a position to assess the annual income.
Yep.
That therefore comes back to leading into the set of full financials.
Yep.
Full financials include the aspect of cash flow.
Okay, yes.
Include the aspect of profit and loss, the income versus the expenses outlaid through the financial period, within a category of analysis into subsets of categories. Like you've got examples such as petty cash. How is that broken down? You've got cash flow aspects. Your expenses will always consistently outline summaries and detailed of information that are allocated within the general ledger as it is prepared for the financials, being balance sheet, profit and loss, cash flow statements. So in that regard, we go ahead and present information to the ATO in a set format electronically, and that may well be an individual income tax assessment, that may well be a trust return, I'll say trust assessment, or a company assessment, or a partnership assessment. These aspects, once that has been completed and lodged, the ATO will send back what you've mentioned previously as a notice of assessment.
Okay, and what's a notice of assessment then? Is that your results somewhat?
It's kind of like the ATO saying, yes, we agree with what you've
Right.
actually sent through. So therefore, they've called it the notice. We're giving you notice. We've accepted what you've said as your final assessment. So that's why it's referred to as a notice of assessment.
Now, with those full financials they have, in simple terms, they should really tell a story, shouldn't they?
It should tell a complete story as to how the business is performing. Either it be on a growth basis, either it be in a contracting environment. That's why you need to see the 2 years to get the history developed and to see where the business is actually growing, if it's been or the capacity to lend.
Fantastic.
Or to borrow.
Now, from not from a broking perspective, because we'll leave keep this into a context of looking at those financials. So yes, the banks ask for 2 years full financials, but we need to have the ethical position that even though that's what they're requesting, we need to actually make sure the people in contact with good accountants, if they've got their own or if they haven't, we can help them to see, well, even though they provide information for broking, we'd also like to open the conversation to see if that client needs additional accounting needs, and if we saw some potential warning signs in those financials or things that may need addressing, like what would be some typical things that could be overlooked, which would be worth a conversation with yourself on, that you might notice that the typical person might have overlooked in their financials?
Well, the common market when it comes to sole traders, they go ahead and in some circumstances they can't be fagged with all the rigmarole behind providing all the financials, source documents to their account. So they go ahead and say, okay, well, on a quarterly basis, this is my income, this is my expenses, and then it comes back to the account preparing based upon the information supplied by the client. But I have no confidence because the client may not necessarily be in a position to include everything they've got ahead and expended upon. You might have small items. You might have hopefully you wouldn't have large outlay items being missed, but you may have small items that accumulate over a period of time, being that 12 months. Like that 12 months, $20 here, $20 there, $20 here. It adds up. So it's in the benefit of the client to sit down and discuss what they've gone ahead and done and how they've come to the point of saying, this is my expenses for the year. What did they do? And then get the expert advice to analyse, okay, this is where you may have missed out on, but it may also be a case of items that are as small that they don't consider to be an allowable deduction. The client's not the educated individual.
That's right.
The client is relying upon the accountant to advise and to provide advice in relation to what they should be taking care of and what they should be bringing into account. The client on their own, any tradesman, are not adverse in regards to analysing their own. They'll go out and utilise their MasterCard and they'll go, oh, don't worry about that. Cool. So that may be entertainment costs that could be allowable. These aspects that could possibly be incurred over the period of time, over a 12-month period, may be missed. So it's always best to go and speak to your accountant and to get a consolidated view of what you're doing with the expenses.
Absolutely, which leads to another question. Due to the impartiality of the advice from the accountant, and we would hope that it always is impartial and it is within our network, with the question that may be posed, you've looked at the financials and that's what me or one of my team, the brokers, requested, the discussion whether it is actually an appropriate time to buy that property or not.
Absolutely. And it does come back to whether or not the business is, or the retained earnings is there to sustain the increased outlay that will be associated to an introduction of an additional loan.
Absolutely. Now, we often get a number of people, the self-employed, and we'll use it as self-employed, this person, they're not great at managing cash flow. And their business cash flow, but then also their personal cash flow. And let's just say cash flow because it's all their money or the entity's money. Now, for this person that comes to me and they say, I'm self-employed, I've got these, but there isn't suitable cash flow, how can you assist in actually creating somewhat of a plan for them to get to that point of buying their own property?
Well, it's cool. It's budgeting. Analysing what they've got ahead and done historically, and therefore discussing where they can possibly save to increase the net cash availability to incur or to manage that additional liability being brought on.
Fantastic. Also, as far as cash flow goes as well, self-analysis of those things. Most people don't know what they're spending. We see it all the time, and we have some of those discretionary expenses. How often do you see on there that there's people, they couldn't possibly save any money, Jason? However, you itemise, what sort of helpful exercise would it be you going through and looking at itemising that discretionary spend?
First and foremostly, it comes back to try and eliminate the discretionary spend or try to minimise it. That discretionary spend, if you can't utilise it as a tax deduction, is pointless. So you're trying to minimise it. So with that aspect alone, you can spend at least maybe half an hour to an hour itemising those discretionary expenses that are not really warranted to be introduced. If you can't take a tax deduction, then don't even expend it.
Great. Now, also on that budgeting, cash flow, discretionary spend, there's in more times often than not there's more than one decision maker, and you actually can have two parties that aren't aware of each other's spending habits. So how can it be helpful getting them both in and analysing that both individuals spending as well?
Well, that's always a dangerous territory to talk about. It depends upon how you have built up the relationship and whether or not you feel confident in being able to get the two individuals or partners involved to come together at the same point and discuss these hidden, I'll say hidden costs. Everyone's got their own individual accounts. No matter how you may well be in a relationship or you might be married, people still maintain their own individual accounts. So these hidden elements, it depends upon how it's a very delicate discussion that you have to have.
Yeah, it absolutely is. We'll leave it there, and I'm sure we'll get Jason to contribute at a later date as well. And I thank you for your time, Jason, and I thank you for the audience listening. I'm Jeremy Reynolds. This is Jason Jones, and if you'd like assistance with any of the things mentioned today, whether it's your home loan or assistance with those the taxation, the full financials, budgeting, so then you can prepare to potentially buy a property, please call myself on 1300 541 777 for a consultation today. Thank you, everyone.